Billionaire investor Leon Cooperman says S&P 500 won't hit a new high for years and housing prices will probably fall. So today I want to read this article and I want to talk a little bit about the market because I get a lot of questions about where the market is headed, and I think this is really interesting because Leon Cooperman told insiders in an interview he thought the stocks were overvalued. To some certain extent, I've actually seen this in the portfolio where my portfolio has had some pretty rough days lately with the stock market going down. And I'm sure you guys have also seen numerous red days in a row. And the billionaire investor said that he didn't expect S&P 500 to hit a fresh high for a long time. Now, I'm going to discuss whether this is true or not. If you look at the S&P 500, that's basically the S&P 500 ETF here, the SPY. I am always looking at this. It used to be my biggest position. I have since gotten out of this and I have a big position on Apple. You know, it's obviously very important because whatever the S&P 500 does, it obviously has many components within it. So if this goes up, the rest of the market goes up. You know, it's kind of like a rising tide raises all boats, or a low tide, lowers all the boats. Essentially Cooperman said a rolling correction was underway in housing, where house prices were likely to drop. Leon Cooperman said the stocks were overvalued or overpriced and the S&P 500 wouldn't notch a fresh high for a long time. I made my money being a bull, but I find myself somewhat pessimistic at the present time. Now, guys, I feel kind of like that as well right now. I am a little bit pessimistic on the market. Now, also, I do kind of, lean on pessimism anyways because I want to protect myself and be conservative in general. But I do have this feeling right now, especially as a lot of, even good companies are coming back down. So more than a decade of near zero interest rates and gratuitous government spending have pulled gratuitous. This is, I was more of a math guy. Driving up asset prices and running up the national debt, he said. Ultimately, the piper has to be paid. Here's the thing, the interest rates are no longer zero. They've gone up quite a bit. So we had a little bit of a pullback as well. So things are looking a little bit better. And if you look at, statistics, the market has pulled back 20 times since 1980. It's only pulled down 50% 2 times, okay? So, even if this is a correction right now, it's unlikely to get that much worse. But at the same time, I could see the stock market going sideways, and that is possible. Let's say the next 1 year, the S&P is still around 421. Now, that actually wouldn't be bad for option selling, because if you're selling options, then you're collecting income from, basically when the market does not move. Okay, so if it goes sideways, that's actually good for option sellers. Now, if it goes down, obviously, we're going to get executed if we're selling puts, so we will get assigned some shares, but that's fine, right? For me, dollar cost averaging is the best strategy, especially dollar cost averaging into high quality companies. So, I would say that if we're dollar cost averaging into high quality companies, that's fine over the long term because it's only a matter of time until the market does become bullish. Continuing, Cooperman predicts that the S&P 500, which has returned at least 12% in 5 of the last 7 years, would underperform for the next few years and not surpass its current record of about 4,800 points for a long time. Just because the S&P 500 doesn't surpass this mark doesn't mean certain stocks won't, and also doesn't mean that certain stocks won't crash. So there's still going to be a lot of opportunities, obviously looking at some single stocks. Especially for me, I think the tech stocks are going to outperform the general market. Just because their gross margin is going up, as well as their revenue and consolidation in the industry. I mean, these companies keep purchasing others and doing acquisitions. So the value does stray, or the value does go to the top companies. I mean, that's true inequality, basically in all areas of life, not just money. But the best results go to the few top people. And that's just how it works. So he said buying an index fund wouldn't be a winning strategy and investing would be more of a stock picker's game. Yes, okay. I am a big fan of actually stock picking, although I've been in index funds for quite a time. Right now, when I look at my portfolio, I do have a lot more single stocks, right? Like Apple, Amazon, Microsoft, a little bit of Meta. So I have been more of a stock picker, but that doesn't mean I'm an active trader. Okay, there's a big difference. All right, I'm not actively going into the market and trying to pick that next winner, right? I've had a little bit of failure on Oatly and other stocks, but very small positions. My current position only is 0.19%, not even 1% of my portfolio. Same thing with NEO, small position. But when I put big money to work, it's going to be Apple. It's going to be, the higher quality companies. Like there's ExxonMobil, okay? There has been plays in my portfolio when I put big money to work, it's almost always a big, large cap company, blue chip, okay? So the former boss of Goldman Sachs asset management arm, who converted his Omega Advisors hedge fund into a family office in 2018, By the way, family office is basically he's investing for himself and like private investors, usually taking pretty big fees. So even if he outperforms the market, his fees are probably very, very high. So you just don't even break. I mean, you're still getting an S&P 500 return. So it doesn't really make sense. A lot of people look up to these big asset managers. They typically underperform the market. So honestly, that's why you should learn how to do this stuff yourself. And I do have a Discord community. Obviously, like I'm a coach and I get paid that way. But if you take a look at it, financial advisors are completely useless. These hedge funds are completely useless. So yeah, I'm still being authentic that I'm a little bit biased, but I literally have the best program out there for you to learn how to trade and pick stocks yourself, because that's what you should be doing. You should be managing your own wealth. You should not rely on financial advisors or anyone else or the news, because the news gets paid based on views, right? So anyways, pointed out there had already been a bear market in the vast majority of stocks. A handful of big tech names, including Tesla, Nvidia, and Microsoft, have pulled the major indices higher this year, but excluding the so-called Magnificent Seven, stocks are virtually flat. Right. So Magnificent 7 is exactly what I am going for. I think those are the best. So let me just click this link real fast. Magnificent 7 tech stocks, okay? Tesla and Nvidia. Tesla and Nvidia are two stocks I'm actually kind of short on. If you guys watched my last video, had a lot of call credit spreads actually on Nvidia. As you can see right here, had a lot expire because expiration was on Friday. And as I'm making this video, it's the weekend. But Nvidia, I have call credit spreads, and then Tesla. What was Tesla? Actually, I had put credit spreads on Tesla, so I'm on the wrong side of Tesla because it's going down. Okay, not good. But I'm a fan of the Magnificent 5. Okay, yeah, English is kind of my first language. I was born in America, but I learned it simultaneously with Russian because my mom came pregnant from Eastern Europe, and basically my parents spoke Russian at home because they didn't really know any other language. And since my mom was with me and my dad was like mopping floors and working at night at a restaurant washing dishes, my parents never really got that good at English, even though they've been in America for 29 years now. But still, it was a big barrier for them because they had to put food on the table. And many of you guys might be in a similar position where you're trying to take care of your family. You're watching my videos because you want to be financially free. And I just want to say that you're doing a fantastic job and you should hang in there because you're going to be successful. You just have to keep your head in the game, keep learning, keep watching my free videos. You don't have to join my Discord, only if you want to, only if you want that extra help. But I'm here to support you. Sometimes I call this financial therapy because there's no right answers in the stock market. If you watch all these videos, like what's going to happen up or down, we really don't know. But sticking to a simple strategy over the long term works, compounds your wealth, and it gets you into a good place financially. So I just want to say hang in there. If you are making decent money but you can't save it, that's why investing is important. If you're making good money and you are able to save it, that's an even bigger reason you should be investing. And if you're not making any money and you want to go full time, that's a tough position. That's a desperate position. I feel for you because I've had the same position. I went through so many struggles in life. I'm still going through so many struggles in life. They're just not financial. I just want to encourage you that hang in there. And this investing stuff really works. It really works for the long term. Trust me. All right, so home values have been shored up by a decades-long shortfall in the number of new homes built each year. Prospective sellers have also balked at listing their homes and taking on a new mortgage when 30-year interest rates are 8%. That's true. So basically his argument is that a lot of things are overvalued. This is Cooperman was recently published in a memoir titled From the Bronx to Wall Street. So I wouldn't really look up to these investors. These investors, I want to throw out investors loosely. When you see someone on YouTube, and hey, I'm, a little bit guilty of this too. When you see anyone in the media, okay, these investors so-called, they are getting paid other ways. This guy is mainly actually a sales guy. So is Cathie Wood. So is, Warren Buffett. These guys are excellent at raising capital, having large amounts of money where they take lots of fees, okay? Same thing with a lot of YouTubers, right? They're getting views and they're getting paid and then they have programs. And look, there's no good guys. I'm also selling a program, but at least I am 100% dedicated to delivering good results. And I didn't do this because of money. It just happens to be a byproduct of my passion and hobbies and helping other people. It's just a byproduct. It wasn't my main goal to, create some big, Discord or anything like that from the get-go. It was, I want to help people. All right. And that was my goal. But anyways, I just want you to be cognizant of this because a lot of these guys that are saying they're investors, it's loosely. right? They're investors loosely. Same thing with YouTubers. They're saying they're traders and they have 10 screens. And be careful. I would really dig under the hood and ask yourself, what is that person's motivation? Okay, and I'm just kind of educating you here about everything, life, stocks, investing, because I think it's important. I think the more you know about life, the more money you will make. Unless you just throw all your money into the S&P 500, which is also a good strategy. Like, you don't even need me, you don't need anyone. You have completely yourself, and if you throw all your money into S&P 500, you never have to watch another YouTube video again. You can be done off YouTube and just put all your money in S&P 500, and that's going to do pretty well. Like, over the past 5 years, it's up 58%. I would encourage you to also do covered calls. I think that would get you even better results selling puts. But honestly, if you keep it super simple, I think you could do really well. And I don't think this investing stuff is really rocket science. It's just the function of time. And that's like the most important thing that I learned in college was time. Compounding your wealth is mainly time, and then obviously the number, the percentage return that you get. But even a high percentage return is usually not that worth it if it's a lot of volatility. I know so many people, you guys want to become financially free because, there's pain points. Whether you have a boss or you're going to a job, I sometimes forget that feeling, but I really hated coming to work. Like, I was at Goldman Sachs in Los Angeles, and the market opened at 6:30 a.m. in California. Some of you guys actually many of you guys are in California. Many of my clients are in California. But I'm not a morning person, so it was really tough for me to manage my life and wake up early. So I'll be honest with you, when I was working at Goldman Sachs, it was a really tough time in my life. Like, I learned a lot, but at the same time, I had some major issues. I mean, we're still always evolving and improving in life emotionally, physically, and stuff. And just coming into work was so difficult for me. And by the 6th month I was working there, honestly, I was coming into work late because I was so broke. Even though I was getting paid well, to be honest, I wasn't used to spending money. So I wanted really cheap rent. I got kicked out of my place that was not that far from the office, and I had to move in with an ex-girlfriend of mine at the time. I really didn't have a whole lot of savings. I just had to really, maybe I had some, but I really couldn't spend it. Like, mentally, I was just such in a tough place with money. Even though I had I don't know, let's say 20 grand or something saved, it felt like nothing to me. It just felt like, I don't know, I was just scared of not having any money and living at home with my parents. They're obviously from Eastern Europe, and it's just not easy. Soviet Union parents are really tough, emotionally. So I was in a really rough place and I really needed money. So I decided that, I was going to commute to Goldman Sachs. I had to wake up at 5 a.m. and I was just screwed. I just felt so exhausted emotionally. And one morning I actually almost ran someone over because it was pitch dark outside and they were crossing the street and I was half asleep. And I was like, oh my gosh, I could have killed someone. And yeah, it was just a really tough time for me. And I think a lot of this pain really led me to realize that I just really wanted to focus really hard on money. So I took it really seriously. And, luckily I continued to save money, right? I started with $2,000, kept learning, kept educating myself. I read so many articles at Goldman Sachs. And when I was reading articles there, they were all just options. And to be completely honest, I was a financial analyst, and kind of a confession, I wasn't really doing my work. I didn't feel passionate about looking at these billionaire portfolios, or even someone that has $50 million and the financial advisor was going on a meeting with them. I felt like it was sort of like a scam. The financial advisor just collects a fee, he puts his money into just random funds, and then he just kind of has a meeting where he just kind of kissing butt, how's it going and how are you? And it's just seemed really fake to me. So I really kind of felt detached to really doing my work. A lot of what I did was just research options. I was really interested in options, and I had the portal to just learn. So I learned not the strategies, guys. The strategies are free on my YouTube channel, right? If you watch my YouTube channel, everything is free, covered calls, etc. But where the real difference comes is the management of the strategies. When do you roll? When do you close? How long do you hold a position? And how do you think about delta and these type of little things, right? They matter. They can make a really big difference. And that's what I really studied. When I was there, I was looking at specific stocks and expiration days and what was working. And I was super fortunate to have experience there. Obviously, it's something that has really changed my life. And yeah, it's crazy how fast time goes. It's almost makes me want to cry. Makes me want to cry how fast time goes and opportunities come and opportunities go. And yeah, I'm kind of going through a tough time in my life, but I just want to encourage you guys to keep your head up. This option trading stuff is really something that has changed me financially, and I think it's going to do the same for you. As long as you keep your head in the game, I'm here for your support. If you need anything, first link in the description. You can, watch my training, book a consultation. You can also email me. You can message me on Instagram. I'll put it into the description. But yeah, I'm here to help you, and I want you guys to succeed. And I'm doing this because I really don't know what else to do. I have enough money to live on. Sometimes when I check my total portfolios, I have two, and how much I'm making, even as a coach, I don't know what I'm going to do with it. So yeah, I'm just doing this because I love it. Okay, so I'd love to help you, and I'll be here for you. So yeah, keep watching my videos, and thank you so much. I really appreciate you. And if you don't mind subscribing, that would be fantastic. And leaving a like on this video also means a lot to me. So thanks so much. Bye.